What's going on YouTube? In this video, we're talking about Pepsi, Pepsico, ticker symbol PEP. Year to date, this company is down 9.46% over the course of 1 year, basically flat. So Pepsi did announce earnings. I believe it was yesterday or the day before, and on their earnings, they beat on top and bottom line. And in the earnings transcripts here, most of what they talked about that analysts and were asking questions to Pepsi was the portion sizes. It looks like Pepsi is working on reducing and making smaller portion sizes. And also the other big concern is the weight loss drug that is available that they think may impact Pepsi's revenues going forward. So I think that's a big part of why Pepsi is down as much as it is from all-time highs at about $191 per share. So Pepsi, in case nobody is aware, they make beverages and snacking products, and basically they're in every single store around the probably world. So they're basically everywhere, and you've probably had their beverages or snacks at some point in time in your life. So on the financial side of things for Pepsi, we can see our revenue, gross profit, and our net income is over here, which is also down here in the yellow, but a little easier to see over here. All three of them are trending higher, which is good to see. So our gross margin appears to be slightly declining, but for the most part, right in that 53 to I'd say 53 and a half to 54 and a half range, right? So 1% range. Net margins here looks like we're relatively consistent. I give them about 9.5, 9 to 9.5 for an average net margin range ballpark, right? So just shy of that range currently in the trailing 12 months, but within shooting distance of where they usually sit. But on a company that's so stable and consistent, usually lower net margins like that are actually not necessarily a positive to the stock price. Revenue and gross profit year over year change actually have kind of seen some pretty stellar growth for such a stable company, about 4 to 5%, and for the last couple of years actually much higher than that. So not too bad over there. Return on invested capital, they're sitting at a roughly, 15, 17% range. So pretty consistent return on invested capital. Cash to debt, they have a substantially larger amount of debt to cash. But as we can see, though, that's not how this company has always ran. As of really the last like 4 or 5 years, that's how this company is transferred over to more short-term debt than cash. Cash to debt, for long-term liability, well, total liabilities to total cash, really a small amount of total cash to a substantially large amount of total liabilities over at this company. Net income and free cash flow, we got more net income than free cash flow. That's always good, but it's been like that for many, many years. So good to see. Free cash flow, we can see starting to drop off a little bit here, but stabilizing right around that, 58, $5.8 billion mark. Share count slowly declining. Dividends are growing. So if you're a dividend investor, obviously you like to see a very consistent growth rate on that. Capital expenditures are also growing at this company. So we have three other sources here. We have KO, Monster, KDP. We only have one red flag over here on a PepsiCo. We have revenue growth forecasted is below, 5%. Market cap, Coca-Cola and Pepsi are about equal. And we come over here to revenue, gross profit, and income. We can see that Pepsi is the leader in revenues and gross profit. However, Coca-Cola has a higher net income than Pepsi, even with less revenue. 5-year growth rate across the board. Pepsi's actually got the lowest growth rate compared to everybody else. Gross margin, everybody's right in the line with one another here. We're all pretty close to that mid low 50s. Coca-Cola is the leader. Operating margin here, we have Monster, the leader of 27%. So Pepsi's got a long ways to go to be somewhat equal to the competition in operating margin here. Profit margin, same thing. Pepsi's actually the lowest on the profit margin side of things across the board. Free cash flow, however, Coca-Cola takes the cake. Pepsi's second. The other two companies are uh, quite a bit lower. However, they do have a lot less market cap compared to the other two companies. So return on invested capital, within the rest of the range of the other companies we're comparing to, and the PE on this company kind of richly valued compared to Coca-Cola. I would think Coca-Cola would be the higher of the two because of the overall financials and how the margins are at Coca-Cola. I would think I'd want to pay more for Coca-Cola than I would Pepsi. Calculator spreadsheet. We have Peter Lynch valuation. Peter Lynch gives them a value of $67.49 per share. Multiples comparison, we get $169.16 per share. That's based on the three comps we just went over. The manual PE, we take our market cap minus off our cash, add in debt, divided by cash from operations. We get 27 years. Well, not 27 years, but a 27 PE on this company. So kind of richly valued on that side of things. Price to book, 5-year average 13.8, currently sitting at 12.5, so undervalued. Well, based on the 5-year average. PEG ratio, not a growth company, so that's kind of irrelevant. Graham's valuation, I gave them a 2 for a very stable, mature company. That gives them an intrinsic value of $159.13. Dividend discount model, they get $164.99 per share. Discounted cash flow. Analysts had 11% growth rate on the free cash flow. I matched their 11%. That gives them a discounted cash flow price per share of $155.61. Rule 72. EPS, current PE. We have three sources of growth for the EPS, average of 9.5. That goes in 72, 7.5 times. That goes in 10, 1.3 times. So we get to double our EPS 1.3 times. So I gave them a 15 for a future EPS, which gives them a fair market value of $71.84. So over here, we have our final valuation on this company, currently trading at $162.56 per share. Analysts have a price target of $193.25 per share. We got a price target of $131.37, 30% margin safety, $92 per share. Now, one thing to note on a company such as Pepsi is that typically these companies don't trade for a fair market value. They usually trade at a premium because they do have they have a dividend tied to them as well. So investors are willing to pay more than what the company is worth today. So the overall, typically they just trade higher than what they're valued at. So usually any big dip on a consistent company such as Pepsi is typically worth buying or at least adding to your position. So over here on the stock chart with Pepsi, we can see Pepsi has broken this longer term upward trend line of almost, probably close to 4 years now, pushing almost 4 years, probably 3.5 years there. And just consistently, every time it touched this line, it bounces, touch, bounce, touch, bounce. But I think that Ozempic weight loss pill has kind of thrown a curveball into Pepsi. Has a little bit of fear, thinking that it's going to impact Pepsi's, revenues, which is possible. But I think Pepsi will find a way to combat that. And I would imagine they've been talking about portion sizes, cutting out portion sizes, making smaller portion sizes, so that way people are still not consistently continue to buy the snacking foods and the smaller potential cans of soda from Pepsi. So I think they might be able to combat that potential risk that would impact their business, assuming it happens. So we can see here that's probably leading to some fear over here at Pepsi, which actually could be a good thing, assuming that doesn't impact the business. But if it does, maybe we can see that 130-ish dollars per share for our fair market value over here at Pepsi, and that could potentially warrant for a decent buying opportunity on this company. So hopefully that continues to sell off. I could see the first support range being about $150 per share. It's not a super solid support range, but I think 136 range is probably much more of a stable, harder support range. 150 could keep this up, but we'll have to wait and see. We can see down here in the MACD and the RSI that this company is deeply oversold. Whenever it gets to this bottom line of the RSI here, this dotted orange line, we can see every time it gets there, it bounces, and every time it gets down here on 2020, it bounced, and then it bounced again. So every time it kind of peaks down here at this line, it usually bounces higher. So we can probably see that that's what's going to happen over here at Pepsi. It's currently trading at $162 per share. That doesn't mean this thing still can't sell off a little bit more, which I think it might. So if it thing pierces through and comes down to like $150 per share, you could probably trade this on a swing trade for a bounce higher, and then maybe it resumes lower again for another retest of here, or potentially breaks down to here. If it breaks down to here, I think that could be a good spot for a long-term buying opportunity on Pepsi. Again, as long as the financials hold up and as long as that weight loss drug doesn't impact his business too much. But we'll have to wait and see what actually happens with that. And that's what we got for Pepsi over here. So currently, I would have to say Pepsi is overvalued. It's got a little bit of a an unknown headwind ahead of it. But that's it for Pepsi. Pepsi looks like it's headed for some lower price action currently, and honestly, that's I hope we get it so that way we can get a buying opportunity on this company. So if you found value in this video, drop a like, subscribe, comment, and we'll be back later with another stock analysis video.